Hey, how you doing? I'm Rob Haley, Vice President of Transportation for USI Insurance Services. I'm here today with Pierre Laguerre, who happens to be the CEO of one of the most innovative trucking companies I've seen come across the line in the past few years. And Pierre, I just think we want to know a little bit more about you and how you've done this.
Thank you, Robert. Thank you for having me, man. Really appreciate it. Yes, my name is Pierre Laguerre. I'm founder and CEO of Fleeting. For me, is I've been in the transportation space for about 17 years, Rob. I started as a truck driver, went on to become an owner operator. I built a staffing agency to 2.5 million in revenue under 18 months, and also built a trucking company. So I think spending that time in trucking allowed me the opportunity to truly understand the pain point on multiple fronts. So this is why we decided to build a platform that's equitable, that brings value to every players in the industry, as opposed to squeezing one party and providing value to the other party. So that's what Fleeting is. That's where we exist.
So you talked a little bit about this platform. So why don't you explain the platform and how it differs your business model compared to the typical trucking business model?
Yes, absolutely. So for us, our platform is a marketplace that gives shippers and trucking companies access to full CDL truck drivers that can operate their trucks 24/7 around the clock. And as we all understand, the problem in the trucking industry is not that the industry cannot hire drivers, but we have a huge problem around retention. So we understand the reason that we have this retention problem is because the trucking industry doesn't provide flexibility to truck drivers. Unfortunately, this is one of the only industry you're not going to get work-life in balance. So that creates a bigger problem for the industry. No one wants to become a truck driver anymore. So it becomes very hard to find qualified drivers that want to do the job, especially in today's market. So actually, our platform gives those shippers that peace of mind, or that trucking company that peace of mind, to tap in and request a driver when needed. At the same time, it gives the driver the ability to create their schedule and find the times that works best for them, improve their bottom line, and spend more time with their loved ones.
So on your platform, the drivers are able to go onto the platform and pick their schedules of when they want to work, and that's really helping with your driver retention and making the guys that are working for you a lot happier.
Absolutely. So yeah, so right now we're currently live in New Jersey, New York, and Pennsylvania. So once the drivers go through our vetting process, just like a DOT standard application, making sure that the MVR is good, make sure we check the driver pretty much credentials. He has to go through a drug test. We make sure that there's no prior accidents or ever leave the scene of an accident on his MVR. Once we kind of collect that information and the driver is qualified, then that driver can now create a schedule and say, okay, look, I want to work Monday through Friday, and this is the time that I'm available. However, sometimes we may have an exact match for the time that the driver wants. Sometimes it's still, we have to understand from the trucking company standpoint, what time did they request the driver? So drivers kind of have a buffer around what time they say they want to start. They want to start between 5 a.m. to 9 a.m. So once that customer posts the need, the drivers can see the work and can accept the job and get it completed. Now, what the drivers truly appreciate about our model is that if a driver can work 2 weeks straight and say, hey, look, I need a week vacation, he doesn't have to explain anything to us. He doesn't have to act like he's sick. He could just pretty much take that week off, and when he's ready, he can come back to work. And I think that's driving the retention on our platform, allowing drivers to stay, because we don't have that tied to the hip relationship just like most trucking companies do. It's very demanding. So drivers get the flexibility, and the trucking companies get the talent whenever they need them.
So you're gaining a lot of traction and you're having a lot of success. What do you think the biggest challenges that you've had to face to get to this point in starting a trucking company? And what can you tell other entrepreneurs like yourself that are trying to start a trucking company? What type of valuable information do you think you give them and best pointers?
Yeah, no, for sure. Now the thing is, let's be very honest here, right? Any business is gonna come with its own sets of challenges. It's just that very unfortunate. Trucking challenges is totally different out of the world. So for me, running into the challenge to really, getting customers to adapt to this model, getting trucking companies to change their old ways of thinking to adapt to a new way was one of the biggest challenges that we run into. But also, let's talk about, the insurance aspect of this business, right? Trucking companies want to make sure that the drivers that we're providing, or for shippers asking us to provide a driver and an asset, a truck, they have to make sure that we have the right insurance. And I think, once again, thanks to you, by being able to educate us truly on what is the best step to take, on what type of insurance that we need to have in order to build a sustainable, successful business. So I would say those two was one of the main challenges outside of raising venture capital to build our business. But those are some of the challenges that we ran into. So for entrepreneurs that's really to think about, building businesses, what I would say to them is that nothing is going to be easy. It's always going to be a challenge. And I think you have to kind of accept that challenge. You have to understand why are you doing this. It has to be a burning desire, because if you don't have a burning desire for what you're doing, the minute you run into some challenge, you're going to quit. You're going to walk away from it.
There's a lot of different situations and different scenarios, especially as we see, people like yourself where, the insurance policies are not boilerplate. There's no one doing what you're doing now. You have a different concept than everyone else, and you're kind of disrupting what, underwriters do in the course of a day. So there had to be a lot of special wording and language inside of your insurance policies, and it took a little bit longer to put together. I think that, and I know you as well, you think that, insurance is definitely a struggle, especially for these new ventures.
Absolutely, especially for new owner operators, it's always going to be the challenge. And I think once again, USI Insurance was really very helpful. Your team is very attentive to our issues whenever we have a questions. You guys were there to answer that question. And I've worked with other insurance companies before, but I would say you guys, man, I definitely give you an A+. So I really appreciate that. But on that note, I think now I want to ask you some questions yourself, right? Because like you said, you got your CDL when you was 21 years old. You could have run a trucking company. You could have done anything. Why the insurance industry?
So, I was a young guy, and I went to college for transportation, and I loved everything about the trucking business. I loved loading trucks, I loved driving trucks, I like dispatching trucks. But when it came to the financials behind the trucking business and figuring all of that out, at the time I was just too young. I was too young to understand it and run a successful operation, and I knew that. So I took a step back, thought about what I really want to do, and I saw myself being a lot more valuable to other trucking companies that have been in the situation that I've been in and know how to help them out and have the tools and resources behind what I do now to be able to help other people run successful trucking companies.
Great, great. So now, since you're the expert in the insurance, like I said, you've been able to really help us. Now, I want to ask you this question. What is it that companies need to do to keep their insurance low? What do you think, whether it's a new entrant or existing trucking company?
So I see a lot of time, especially with smaller fleets and owner operators, where every year they call several brokers and they're trying to shop their insurance, right? And most of the time, especially if you're dealing with a large insurance broker, we have all the same market access. So we could go to all the same carriers and come back with the same quotes. But the real difference is when you're dealing with a top insurance brokerage, they're not just working on quoting your insurance. They're working with you side by side throughout the year on risk management to help change your risk profile. So a carrier that you get denied with every year and doesn't quote your insurance, we're helping you run your company and help with your safety in order to make yourself qualified for those carriers that may have reasonably priced insurance. Now, on the fleet side, it differs a little bit because there has been a rise in claims and nuclear verdicts, and the insurance carriers are losing money every year. But there are companies that are run very well and, subsidizing the insurance industry, because they're paying a lot in premium and they're not using any of their claim dollars. So those companies, that have their pulse on risk management and know what percentage of their claims are predictable, and there's always going to be outlier claims, but they know what they're spending on, regular run-of-the-mill claims. Those companies can actually save money by taking more risk. And what do I mean by that? So, like most smaller companies, have what they call the guaranteed cost insurance program, which means the insurance carrier is paying from $1 on the liability. They might be a little bit familiar with deductibles from their physical damage aspect of insurance, but as you get into larger fleets, you could go into high deductible plans and then captives and self-insurance, which you can have a significant savings on your insurance cost if you have your finger on the pulse on your risk management side. So having the right company procedures in place is going to be key to that. Having an accident, what you do after that accident is what's going to make the difference, whether that claim settles for $100,000 or $1 million several years down the line. Because if they take that claim to court, right, the only thing you have is what the driver said at that point, your pictures of your accidents, and the accident report. So training the drivers on how to take the correct pictures and not just a picture of the damage, taking pictures from fall around the scene and what to do after an accident, who to contact, and how to give a police report to a police officer. Those are all part of good practice and best business practices to make sure that you keep your claims as low as you can.
Rob, man, you just shared a lot of information, man. I think we really need to have another show to really explain to the audience in detail, piece by piece, what you just mentioned, because, insurance, once again, it sounds like a foreign language to a lot of people in the industry. But what I want to know is, as new motor carriers, how do we understand what's our liability?
Yeah, so as a new motor carrier, the insurance carriers really don't have a lot to rate you off of. After a few years, you hear about people's insurance going down or up, and that's because they have a baseline of kind of how you're operating as a company. When you go through inspections, they're going to be looking at your safety scores, they're going to be looking at your losses, and they're going to be looking at really kind of how you're running your company. And as a newer company, they don't really have anything to base you off of besides your MVR, and the truck that you bought. So they don't know if you know how to run a company yet. So your rates as a new venture are going to be higher. That being said, if you're running a good company and you're having good inspections and you're not having accidents, after a few years, other insurance carriers are going to have a lot more to rate you off of. So you'll be eligible for a lot of carriers that have more reasonably priced insurance.
So what I hear is pretty much making sure that you understand pre-trip, making sure that you hire the right talent, making sure that the drivers are well trained, to make sure that safety is always top of the list, to make sure that in due times you can minimize your insurance. Is that correct?
Yeah, absolutely. The past few years, insurance carriers actually changed how they rate insurance policies. They're actually looking at safety first and foremost. Most insurance carriers are looking at the Central Analysis Bureau software, CAB, which gives a real detailed overview of your company and all of your inspections. And then they're looking at your loss runs, and then they're looking at your drivers, where in years past, they would look at your loss runs first. So it's really a big shift on how insurance companies are using their rating methodology to come up with those rates for new ventures and trucking companies. So safety should be on the top priority of every trucking company right now.
Got it. Now, with a lot of technologies that's really coming up, especially in the transportation industry, what do you think that trucking companies can do? What type of data that we can start pulling to provide better insight to those insurance companies to come up for better pricing for motor carriers? I know there's a lot of, a e-log device in truck, but what key point data you think companies should build to share with those insurance companies?
So if you're planning on building a fleet, data is king. So a lot of people are using telematic systems inside their trucks right now with camera systems, and that's really helpful to us because most of the time what we find is it's not the trucker's fault, in an accident. So we really want to make sure that we have all that data so that we can prove those claims in court are not the truckers and try and get those claims settled for a lot lower amounts. And having that data along with the hard braking and hard stopping and where the trucks are going is really going to help the underwriters get a clear picture of your operation. And it's also going to help you with safety. If you see a truck that is having hard braking issues, you're not only going to save money on teaching that driver how to correctly brake the truck, you're going to save money on maintenance, you're going to save money on accidents, and you're really just going to have an overall better spend on everything because it's also going to affect your insurance rates. That's the least of it.
Got it. Very true. Now let's speed this up a little bit, right? Because I know we in the midst of a pandemic, and as we understand, the driver shortage is not getting any better, right? The industry is really right now tight for capacity. And for me, one thing is I always trying to educate truckers is to think like an entrepreneur. Stop thinking like a truck driver. Put the entrepreneur hat on. Build that relationship with that shipper or whether it's a broker. Really, really think like an entrepreneur. So we've seen there's a lot of trucking companies coming in the industry. A lot of, from what I've heard, so many authority have been issued this year alone. So that means there's a lot of new trucking companies coming in. A lot of truck drivers is coming in. Now, what from your own mouth, and please explain to me, what is the pros and cons of you getting your own authority as an owner operator or you running under another trucking company or another 3PL? What's the pros and cons in doing that?
So there's pros and cons to each being an owner operator, running under your own authority and running under someone else's authority. If you're running under someone else's authority and they're an established fleet, you could probably pay a lot less in insurance because as an owner operator, the only thing that you'll need is non-trucking liability and probably physical damage on your own tractor, versus having a lot more expensive insurance policy with primary auto liability, cargo, and physical damage and general liability. So there's a lot more coverages that would be involved running under your own authority versus leasing on to another company.
We talk about the driver shortage all the time, and I think one thing I want to stress out to the audience is this. The reason I think the problem of driver shortage has become so much more of a bigger problem now is because we live in a world where anyone can go drive Lyft, anyone can go drive Uber, right? Why would anyone become a truck driver and spend 30, 40 days on the road and only seeing their family twice a month and then have to get right back on the road? So I think for me, that's one of the main things that's actually driving the driver shortage. Nobody wants to become a truck driver anymore in today's age. So for us, our model really kind of, give drivers that flexibility. We want to show them exactly how to become an entrepreneur so we can start bringing a new generation of truckers into the industry. Now, what do you think we should do as motor carriers ourselves or as trucking companies when we're thinking about bringing new drivers that just obtained their CDL into the industry? And what should we think about when it comes to the insurance?
So we do a lot of driver profiling and figuring out what drivers are more likely to cause accidents. And when it comes to newer drivers, what we found in a lot of our data is that they may not actually be the most unsafe people on the road. And it really all depends on the fleet and the training. But what we see a lot of times is newer drivers are actually a lot more careful. It's like when I first got my license and I was driving a car, my hands were at 10 and 2. I was nervous. I was always looking out. Now I got one hand on the steering wheel and I'm looking around and I'm changing the stereo station and, and I'm not paying as much attention as I probably should be, so, newer drivers are not necessarily a bad thing. A lot of insurance companies feel differently, and their data shows differently. So if you do hire newer drivers, you definitely want to make sure that you have the right procedures in place and training. I know a lot of people they only let their drivers drive in Class B trucks for the first number of years. Then they move them over to pups, and they're not allowed to drive full trailers for a year or two, and then finally move into tractor trailers. Where other companies, they'll give them a 53 and say, go from New York to California, and we'll see you next week. So there's a lot that needs to be talked about as far as training and really looking at the data and what type of drivers you're hiring.
Absolutely. I mean, I see that we're running out of
the most important part, right? So.
Yep. I see that we're running out of time here, but I really wanted to ask, as far as that, because I think the insurance industry is going to play a major role of bringing new generation of truck drivers into the industry, right? Because that's one thing. You can go out there and recruit 10,000 new drivers, but a lot of times, companies are asking drivers have to have at least a minimum of 2 years of experience or maybe 1 year of experience. And what is it that you think the insurance industry can do to actually leverage that and actually give trucking company a break to allow to hire new drivers? Because we know those costs are very high when a driver have no experience. And this is the last question.
Yeah, so as a newer driver, there's certain insurance carriers that are okay with that risk, where other insurance carriers that their data is showing them that they can't charge enough money to have those drivers go on their policies. So it really all depends on what carrier you're with and where you are as a company. So if you want to pay a little bit more for insurance, there are options for CDL drivers without any experience and being able to add them to the policy and having that flexibility. Whereas if you're a really established carrier and you have a very, very low price per unit, the insurance carrier may not be okay with that, and you may be able to change carriers to a carrier that's a little bit more flexible. But once again, your pricing is going to reflect on that usually.
Thank you, Robert. Really, man, really appreciate it. I think this was a great conversation. Thank you, FreightWaves, for having us here. And once again, I just want to leave some message out there for the entrepreneurs, anyone in trucking. One code that I live by myself is the best thing ever invented to mankind is another 24 hours. As long as we have another 24 hours, we can learn, we can adapt, and we can always get better. So hopefully, I wish everyone good luck. everyone in trucking. Let's keep trucking. Let's keep doing what we do. The country depends on us. So let's make it happen, man. We have a moral obligation to keep this country running, and I'm proud to be a part of it.